as far as Leverage Academy is concerned, you can confidently address us by these names. So we are here to guide you, support you, and ensure you truly understand what you're learning. So over the next 30 days, we'll start from the very basics. Yeah, from zero level. So if for any reason you've not heard the name Forex or crypto before, you're in the right place, because we don't want to like treat anybody as if you've been learning. We want to make sure that everybody is on the same ground. We are learning from scratch. We are all learning from scratch. So we want to make sure that we start from the very basic, understanding what exactly Forex and the crypto market really are, and gradually build a solid foundation that includes market structure, candlesticks, proper analysis, and how to use professional tools like TradingView, MT5, a broker that we actually trust, and that's HFM. So this is not about rushing or gambling. It's about learning it the right way. You understand? Because I know that some of you are still learning this thing, and along the line you get confused. So please, Leverage Academy is here to guide you in the very, very right way. So I encourage you all to stay consistent and attend classes whenever possible. So for those of you that have network issue, if there's any network issue from your end, don't worry. The class session is being recorded, and basically we are going to be posting it on our YouTube channel, so that anytime you have good network, you can easily go and rewatch it on our YouTube channel. So if you are not already subscribed to our channel, please go and do so. Our name on all platform is Mr. Leverage. So once you search, you see the picture, a guy on a purple packing shirt and a tie. And so just help us to click subscribe so that you can support our channel for more visibility. Okay, so lastly, on behalf of the entire Leverage Academy team, we thank you for trusting us. We thank God. We thank our investors too for their support, and above all, we thank God for making this program a success and bringing us all together. So once again, welcome to Leverage Academy. So let's begin the class. I don't want us to waste more time, because there's a lot for us to cover. So if for any reason you are having any difficulty, maybe my screen is not showing or anything is happening, we are in Nigeria, anything can happen. Yeah, so just try and comment on our Telegram group. I'll be checking it, so that if there's any issue from my end, I'll try my best, to fix it. So let's begin. So basically, okay, let's proceed. Now, before you place your first trade, you're a beginner. Before you place your first trade, is a very good thing for you to understand the kind of market you are getting yourself into. You understand? I want you to understand exactly what you are getting yourself into, so that you not say, okay, they did not tell me all these things. So I will try my best to break it down as clear and simple as possible. So let's begin. So what exactly is the Forex market? Yeah. Forex market is the global marketplace where currencies are exchanged. Yeah, it is the largest and the most liquid financial market in the world. Before, you're hearing now. Forex market is the biggest and the largest market in the world. Yeah, there is no market that comes close. You understand? It is bigger than the crypto market, the commodity market, the stock market combined. I think if I could remember very well, crypto market has about 1 trillion daily trading volume. Then the stock market has about I think 400 billion daily trading volume. Then I think commodity is the least. You understand? So they are not even up to half of the daily. It's not even up to. It's not up to the half of the daily trading volume of the Forex market. So let's talk about the key facts about Forex market. For those of you that don't know what the meaning of liquid is in the financial market, it simply means that you can easily buy and you see somebody that wants to sell very quickly. You don't need to wait before you take your position. So if you're buying, selling, somebody's ready to buy. So Forex market is a very, very fast market. It's not like something you wait for days before you can, execute your position. That's the meaning of liquid. So now, the key facts about Forex is that I've already mentioned it already. It has over $7.5 trillion daily trading volume. So over $7.5 trillion is traded every single day in the Forex market. This is more than the stock market, crypto market, and the commodity market combined. Now, the Forex market operates 24 hours a day. It operates 24 hours a day. Okay, I'm sorry. I'm trying to check if my network is still very stable. Okay, we are good. So, okay, so it operates 24 hours a day, 5 days a week. So the Forex market opens 24 every single working days. So from Monday, Tuesday, Wednesday, Thursday, Friday, the Forex market is active. But for weekends, the Forex market is not open during weekends. Unlike the crypto market that you can trade it 24/7. The Forex market is not like that. You understand? It's 24/5. You can trade it 24 hours a day, 5 days a week across the major financial centers. And that's the Sydney, the Tokyo, London, and New York. So those are the major financial centers we have. Okay, so Forex market is a decentralized market. It's a decentralized market, meaning no central exchange controls it. So there is nobody controlling the Forex market. It is decentralized. You have control over your money. It's not like a centralized platform where the government or the bank or financial institution the way they want. Yeah, the Forex market is a decentralized one. And for those of you that are just joining the class, I need to understand that this part of this trading we are giving you, this theoretical part, is very important. You understand? Starting from next week, I'm not going to be doing all these theory notes and everything. So I would advise you to get your pen and your book ready so that you can jot important things, because all this few knowledge will help you. You don't need to cram anything. Just try and follow me. You understand? Follow what I'm teaching. Then you get what I'm saying. So it's very good to have that basic knowledge before we get into the real practical business of trading. That's how to use our candlestick, how to use the trading platforms, and getting a strategy so that you can be analyzing the market yourself. So please, let's endure this theoretical aspect with me. Let's bear with me. So trades are conducted electronically through a global network of banks, brokers, institutions, and retail traders. You understand? Now, these trades are conducted through a global network of banks. So every transaction you're making, you understand, these banks you're seeing here, the brokers, the financial institutions, they are the one providing liquidity. Yes. And we common traders are the people they call the retail traders. We are the ones that are putting in our small $100 to try and make profits from the market. But you see, the banks, the brokers, and the institutions, we call them the smart monies. They are the big whales. They are the big boys in the market. You understand? Because they trade with large liquidity. Unlike us that we are putting in small money that is not even up to $1,000. You understand? So Forex is used by banks. That means foreign exchange is used by banks, hedge funds, corporation, and then retail traders. Now, banks, in case you don't know, because some of you don't know that the banks you're keeping your money, they trade Forex. The central banks, they trade Forex. So your government, they are trading Forex, but you won't know. You understand? Corporations, they trade Forex. Hedge funds, they trade Forex. Now, in case you are getting it twisted that Is it true? You can make it. So I just wanted to, like, calm down for like just 1 minute and think about it. A market that bank is trading, government is trading, hedge funds, corporations, they are trading. So tell me, is there not something involved that they are not telling us, the common citizen? You understand? I'm just trying to explain to you that for banks to be trading this thing and governments and hedge funds, there is a lot to gain from this market if you know what you're doing. If you know what you're doing, the money that is in the forex market, you cannot finish, you cannot make it finish. Like, you can't finish making it. Yeah, it's just too much. You understand? It's just too much. So every trade involves two currency. So in the forex market, if you're trying to take a position, you're not going to be using one. You're not going to be trading just one single currency. No, you're going to be trading another currency. You're going to be trading one currency against one other currency. So basically, if you want to trade now, for example, let's say you wake up in the morning, you want to take a trade, and let's say you're trading euro, for example. Now you want to trade euro, you have to trade it against another currency, another nation's fiat currency. You can't just trade ordinary what is it called? You can't just go ahead and start trading only euro in the market. It's not possible. You have to pair it with another. You need to pair it with another currency. So in forex market, we trade pairs, not ordinary currencies. So if you're trying to trade in that sense, you're going to be trading euro against what is it called? Let's say you're trading it against Great British Pounds, that's GBP. So basically, if you're trading this euro GBP, any decision you're making, if you're trying to buy euro GBP, for example, your bias is going to directly affect the base currency, and the base currency is simply the first currency in that pair. Let me show you what I'm talking about. Now look at this pair. Let's try an example. You see what I wrote here? Buying euro USD means you're buying euro and you're selling US dollars. So basically, okay, some of you have been complaining that you now have access to the internet, and I believe it's normal because we're in Nigeria, network can give you issue. So for those of you that are messaging me that you're not able to join the live stream, just don't worry. The classes is being recorded live, and we're going to be posting it on our YouTube channel, so you can easily go there anytime you have a good network connection and just go and watch it. You understand? At your own convenience time. So let's get back to business now. So I said, any decision you're taking in the market, if you're selling euro USD, for example, now it means you're selling euro and you make one decision on that. The two decisions you can make in the market is either to buy or you sell. So if you're buying euro USD, that means you're buying this base. The first currency here is the base. That's the euro. You're buying it. And if you're buying it, definitely you're selling the other one, because you need to buy one and sell one. So if, for example, I'm selling euro USD, it simply means that I'm selling euro and I'm buying US dollars. I'll give you a very clear example now in our next slide. Now, how to identify the base and quote currency in a forex pair. Now, you see what I write here? I wrote euro USD, euro against US dollars. Now, this euro now, I said the first currency in that pair is called the base. You can see where the arrow is pointing to. Euro is the first currency in this pair, so definitely it is the base. Then the US dollars is the what? Is the quote. In this euro quote, you need certain amount of US dollars to get 1 euro. So basically, you're always going to be needing you're always going to be needing a certain amount of quotes to buy one base. So let's proceed. You understand what I'm trying to explain in the next what is it called? Now the base is always the first currency in the pair, while the quote is always the second currency. I've talked about that. Now the pair tells you how much quotes you need to buy one base. So for example, if euro USD is currently trading at 1.3456, let's take for example, if for example Euro USD is currently trading at 1.3456. It simply means that you need 1.3456 USD to get 1 euro. I don't know if you're all getting what I'm saying. What I'm trying to say is that whatever the coin market price of pair is, you're going to be needing a certain amount of the codes. In this case, we are using USD. You are going to need that 1.3456 example I gave you to get just one single euro. That is that about that. So from the above example, I said euro is the base currency and USD is the code. Let's proceed. Okay, this is a very practical example. Now we have 3 examples here, and I believe we are going to be able to get what I'm trying to say here. Now USD. Now we have USD against JPY. USD means US dollars. JPY means Japanese yen. Now base, I told you, is the first currency. So in this case, the base is the what? Is the USD. Why the code is the second currency, the one on the right. This one I'm pointing my cursor on is the code JPY. So it's the code. Now, if for example USD JPY is having the current market price to be 1.1111, it's 1.1111 JPY to get 1 US dollars, to get single US dollars. You understand? Same thing on the second example we have here. We have NZD against CAD. Again, you understand that this first currency is the what? Is the base, and the second currency is the CAD. So basically, if for example the current market price, as at this time we're talking about, if for example it's 2.25555, let's take it for example. It simply means that since NZD CAD, since NZD CAD is currently having a current market price of 2 point whatever, it simply means that you need that 2 point whatever to get 1 USD in this pair. So if CAD is trading at 2.555, it simply means if NZ is trading at 2.5555, it simply means you're going to be needing 2.5555 Canadian dollar to get 1 New Zealand dollar. That is what it means. Then the third example is XAU USD. Now this XAU means gold. It means gold. Now, in case you don't know what we're talking about here, you see, gold is not actually a currency. It's not actually a currency. Yeah, gold is not a currency, it's a commodity. You understand? It's a metal. So, but as a forex trader, we used to trade it. You understand? And I'll tell you for free that is one of the craziest pair I've ever seen. Okay, I think the one that can still be crazy as gold is silver, XAG. So basically, XAU in the forex market, you understand that we're talking about, whenever you hear XAU, it means gold. Gold. Then USD, you know, is US dollars. So in this case, XAU, if the current market price of XAU USD is $4,500, $4,500, it simply means you're going to need 4,500 US dollars to get 1 gold. I hope the example is very clear. What I'm trying to say is this base is XAU and the code is USD. So if for example the whole pair now combined is trading at let's say 4,500, that means you're going to need 4,500 US dollars to get a single gold. So I think we're done with that. Let's proceed to the next part. Major currencies. Major currencies. Now we basically have 7. No, is it 7? I think we have 8 major currencies. Yeah, 8. We have 8 major currencies, and the 8 major currencies are the US dollars, the AED, that's the Australian dollar, the Canadian dollar, what is it called? New Zealand dollar, Euro, Great British Pounds, Japanese yen, and the likes. So they are I think we have 8. So US dollars, I want to give you some little briefings on US dollar. You need to understand how US dollars work as a currency. You understand? Now US dollars is the what? is the base of the world, like is the most traded currency. So is the Federal Reserve currency. So in the whole world, it is basically US dollars that is mostly traded, is mostly used for different transactions around the world. You understand? And it is used as the global reserve currency. Also, the US dollars is backed by the US economy and the Federal Reserve. You understand? Now, US dollars is also a safe haven asset. Actually, it's a safe haven currency during problem around the world, like when there is disaster. So it's good for you to save your money in dollars, and that's because it's a very stable currency. Yeah, if you're trying to, for example, now we that are in Nigeria, because the host is actually in Nigeria, if in case you don't know. So basically, if there is war in the world, the way currency, our Nigerian currency is to fall anyhow. US dollars doesn't do like that. It's a very stable currency, so it's a very good place to save your money during global uncertainty. So the US dollar affects almost every pair. So that's it. Let's proceed to the next pair. We have euro. So euro is the most common currency for 20 plus European countries. Yeah, countries like Portugal, Germany, France, all those European countries is called euro. And basically, euro is the most common currency in those 20 plus European countries. Now, the second most traded currency after USD is euro. If you're talking about the world, if you're looking at the world, if you're looking at it from the world perspective now, it is the most traded in European countries. Euro is the most traded there. But if it's worldwide, we're talking about, it is the second most traded after the US dollars. Now, there's something some people used to get confused about. If you check the current market, if you look at the rate of euro, you see that the value, the number, is actually more than that of what is it called, US dollars. It doesn't mean euro is stronger than US dollars, or euro is has more stability than US dollars. No, it doesn't mean like that. That number you're seeing doesn't mean dollar is not still stronger or still a Federal Reserve currency. But don't let it get you confused. You understand? US dollar is still the most traded currency in the whole world. Now, okay, euro is strongly affected by the European Union economic news. Yeah. So if there's any news, it will strongly any news in the European Union that is going to really affect the euro as a currency. You understand? So if you're basically trading any pair that involves euro at that point, you're going to see the effect on your chart. If you're actively trading, if there's any economic news, you're going to be seeing it directly showing on your chart like this. That's when you'll be seeing different spikes in the market. Sometimes you can see crash. It depends on the outcome of that economic news. Now, okay, the next one we have here is the Great Britain pounds, GBP. So it is one of the oldest and the strongest currency. I don't know if you understand what this GBP you're seeing. During news time, when there is news, this currency used to move in a very crazy way. Like you see spikes like this. Once there is news that is directly affecting pounds, and you're trading any pair, let's say you're trading GBP USD, for example, just check your chart. You will see the kind of spike you will see. If the news is a great one, if it's a good one for pounds, if you see that candle that is going to form, and you see a very long candle to the upside. And if it's a bad news too, you see that crash, the candlestick, you see that red candlestick like this. That's where traders will be crying for help. So basically, if you're trading, somebody is asking where is the live holding. I said on Telegram, everybody knows all these things now. Okay. I'm coming. Sorry, let me attend to this people. Okay, so for those of you that are just joining the class, I've already dropped the link. So just go and use the link to join the class. So I'm going to continue because I've already explained this thing to you people. If I schedule a class, just click join and you'll be in the class. There's no need for me to even bother to drop links since you're in the group. So let's proceed, please. The next currency, I think we've talked about. Okay, I said GBP, that's the Great Britain pounds, is strongly affected by news. So if any decision that the Bank of England is making is going to directly affect the Great Britain pounds. So GP is known for news release. You understand? So if you're a scalper or you're a day trader, if you are hearing that there's a news, let's say that there's a news that is going to directly affect GBP, make sure you try and close your trade, because as a scalper or a day trader, you're going to be risking small pips. So it's very easy for the market to take you out. You understand? You'll be risking, let's say as a day trader, you'll be risking like 30 pips, 35 pips, 25 pips. Scalper, you'll be risking 15 pips, 10 pips. So you need to close your trade if you're a scalper or a day trader, because that news you can be lucky for the news to, just take you to take profit immediately, and you make profit immediately. But what if the news goes against you? So as a day trader or a scalper, make sure you're closing your trade during news hour. But if you're a swing trader, if you're the type of person that you want to hold your trade for days, for weeks, even a month, swing traders and position traders, they hold trade for long, and it's very wide stop loss. So even if the market, if there's any news, those people, they can have confidence to hold their trade because they have the capital. Their stop loss is enough to contain that news. You understand? That news effect. But sometimes even those people that are swing traders, they can still chop stop loss. It's still possible. You understand? But they just have more, edge more than us, that we are risking small pips. So let's proceed to the next currency. Let's talk about Japanese yen now. Now, Japanese yen, in case you don't know, is a safe haven currency. So it's a currency that you can invest money in during war, during problem, during disaster. You can easily save your money in Japan. You can save it in Japan. You can buy Japanese yen and save your money there. Now, basically, if you're looking at the normal market number, the currency, the exchange rate number of Japanese yen, you feel like maybe it's a very small currency. But I'm going to tell you for free. I think after zero, Japanese yen is another strong currency that you don't want to joke with. It is very, 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 very useful. It is widely traded, just like those four pairs I mentioned. Those three pairs I mentioned earlier. So, it moves slower than, Japanese yen moves slower, but it reacts strongly to news. Yeah, Japanese yen, it moves slower, but when there is news, you will see that effect. If you check your chart, you will see that spikes too. But it won't move the way GBP and all those other currencies are moving, but it moves as well. So the next one is CHF. Okay, that's the Swiss franc. So this Swiss franc I'm talking about here, there's something you need to understand about this Switzerland currency. Now, Switzerland as a country, they have a very, very stable financial health. Like their country is financially stable. Any pair against CHF, that's the Swiss franc, that pair will struggle. Like the pair is going to struggle to be moving. Like you'll not be seeing that kind of, the market will not be trending the way you want it to trend. And that's because this CHF you're seeing is a very, very powerful currency. Now, it's a safe haven asset. Yeah, it's a safe haven currency, rather. So, if there is any global uncertainty, I'm telling you, the best currency for you to save your money with, the best country to save your money in is Switzerland. You see that their currency, it is very, very strong. In fact, if you pair CHF with any pair like JPY or Euro, or you pair it with GBP, I'm telling you that GBP or Euro or Japanese yen, they are going to struggle. Like you will just be seeing if you enter that trade, you see that the market is going to be ranging. It's going to be ranging. It's not going to trend. It's not going to be going up very well or going down very well. And basically, what we want to be targeting as a trader is an uptrend or a downtrend. We don't want to trade ranging markets. Ranging market simply means indecision in the market. It simply means that The buyers and sellers are in a tug of war. They are in serious war. So one party is not too strong than the other party. They are in a tug of war. The power is kind of, balanced. You understand? So the only pair I would advise you to trade, to pair with CHF, is US dollars. Even US dollars as a strong currency like that, it will still struggle. Because that CHF I'm talking about is a very, very strong currency. Don't play with it. So personally, I don't like trading any currency, any pair that involves CHF. The only one I can still trade is USD CHF. You understand? So if you trade that one, the market is still trend normally, but then you will feel that strongness in that. You will see the way the market change because of this CHF we call this Switzerland franc. So that's it. So it's often something during global uncertainty. So basically, when there is problem in the world, that currency are falling in value. The way Nigerian currency, Nigerian naira used to fall anyhow. The way it used to fall anyhow. Currencies like CHF, they will not fall anyhow. They are going to be very, very stabilized. They won't just be falling because the economy is very, very good. They are financially stable. You understand? So this particular CHF is less volatile. It doesn't move anyhow like the way the GBP used to move, go up, go down. No. If you go and check CHF, any chart you see that is, including CHF as either the base or the code, you see that chart is not going to trend very, very well. You will not see long spikes. You will not see surprises in the market. You understand? So that's about that. Let's move on to the next currency. We have Canadian dollar. Now, this Canadian dollar, what we need to understand about this currency is that it is strongly influenced by oil price. So if the price of oil is rising, just know that Canadian dollar is going to strengthen, is going to increase in value. And if the price of oil is falling, Canadian dollar is going to be falling too. You understand? So Canadian dollar is actually like this because it is one of the country, Canada as a country is one of the biggest exporter. So the price of oil directly, influenced Canadian dollar value. You understand? So if price of oil is strengthening, if it's going up, Canadian dollar is going to strengthen. And if it is falling, Canadian dollar will fall. That is that. We still have one more currency after this one. The seventh major currency we have now is the Australian dollar. Now, Australian dollar depends heavily on gold and metal. Yes, it depends heavily on gold and metal. So basically, the movement of Australian dollar basically, correlates. It moves like it is strongly influenced by gold and metal. Yeah, I talked about gold the other time, XAU. So for those of you that are beginners, I would just advise you, please heed to this advice. In fact, if it's possible, but don't trade gold. You understand? Don't trade gold for now because it's going to shock you. Now, the thing is, if the trade is going your way, you'll be very happy because you make a lot of profit. But if it's going against you and you have small accounts, like your account size is very little, I'm telling you, gold is going to send you back to your village. That pair is a very crazy pair. You understand? That commodity, it's a very crazy one. So you don't joke with it, please. So if you're a beginner, just focus on trading the major pairs, the major currency pairs, like the GBP, USD, AUD, USD, USD CAD, any coin, any pair that is, any currency that is in, any pair that is involving the US, and focus on that as a beginner. Don't go and be saying there's a lot of money in gold, I want to go and trade gold. Some of you even say I want to go and trade silver. Do you know what you are talking about? All these all these metals you're seeing, these gold and silver, they move very, very different from normal currencies. They move in a very crazy way that you can blow your account in seconds because of this kind of pair. So the advice I'm going to give you as a new trader is that please forget gold and silver for now. I'm not saying you will not trade it, you trade it. Once you have your strategy and you're sure of your strategy, yes, you can start trading them. But as a beginner, please stay away from gold and silver. Please stay away from them. Now, AUD, Australian dollar, is strongly tied to China's economy. What this means is that if the economy of China is doing well, it reflects Australian dollar. And if it is not doing well, it will also reflect on Australian dollar. And I'll basically be breaking it down for you. Now, this Australia actually, the trading session called Sydney. You understand? You know, Sydney is a city in Australia. Now, Australia is big. The economy is tied to what is it called? Asian market capital flow. You understand? Because of economic reasons. So if China is in Asia now. So if their economy is doing well, basically expect Australian dollar to also to do well. So there's a lot to talk about on this Australian dollar thing, but don't worry, when we get to this part, when we are talking about trading sessions, because we have different forex trading sessions. When we get to that level, maybe I'll try and go deeper into that aspect. So this AUD you're seeing is popular with swing traders, and the reason why it's popular with swing traders is because swing traders are patient people. They are people that they have the patience. They can hold trade for 1 week, 2 weeks, 3 weeks, even a month. Some of them can hold it. But you as a beginner that you want to quickly make money from the market and get out, you want to make quick money as a day trader or scalper, if you're trading AUD, you're going to run out of patience. It doesn't trend, like it doesn't move like that. It's moving. I'm not saying it's not going to move. It's not going to be moving too. But the best time to target it is during Sydney session, Asian session generally. Yeah, Asian session. If you target AUD currency and pair it with another currency at that point, you're going to actually enjoy AUD even as a day trader or a scalper. You understand? So that's it. But as a swing trader, they have down and let AUD just give them that smooth, slow movement. You understand? But as a scalper or a day trader, there is no patience. You want to make that money quick. Now, the last currency we have here is NZD. Now, there's something I forget to mention here. Let me go back and explain it. Now, you see this euro you're seeing here and GBP. You see those two currencies? They are very correlated. Like they used to behave the same way. Basically, if GBP is strengthening, euro expect it to also be strengthening. If GBP is falling, expect euro to be falling. So they used to do the same thing. Like they are positive correlated pairs. Same thing with this currency I want to mention. This last one, NZD and AUD. NZD and AUD are correlating pairs. Like they are positively correlated. If AUD is going up, expect NZD is also falling. For example, AUD is also going to be falling. They used to behave the same way. So the thing is, when I say they are correlated, it doesn't mean they will move at the same pace. No, they are not going to be moving at the same speed. No, it's just that if you're seeing it going up, maybe for example now AUD might be moving faster than NZD, or NZD is moving faster than AUD. But what you notice overall is that they are going to be trending in the same direction. So if AUD is going up, expect NZD to be going up too, but not at the same pace, not at the same rate. Yes. So that is that. So that's that about the major currencies we have. So let me quickly recap. We have 8 major currencies. That's the US dollars. I've explained everything you need to know. You need to understand about US dollars. And we have the euro, and also we have the GBP, and we have the JPY. We have the CHF, franc. JPY is Japanese yen. We have the CAD. That's the Canadian dollar. is an oil currency. I told you about it. If oil is doing like this, expect CAD to do that same way. So you understand. AUD is Australian dollar, and lastly we have the New Zealand dollar. You understand. So NZD is more volatile than AUD sometimes. It's not every time. You understand. And basically NZD is tied to global risk sentiment. Now sentiment simply means what the emotions of traders around the world. You understand. It means that what the traders are thinking about that country's economy. So if the traders are scared, basically it will have a negative effect on NZD. And if the traders around the world are having positive, hope, if there is hype that this thing is going, this coins, the economy is doing well, investors will start investing their money in that country's economy, and thereby it's going to be increasing the value of New Zealand dollar, that's the NZD. So just treat NZD as agricultural currency. You understand? Because it is driven by agricultural exports. Yes. So let's proceed to the next part. We are done with that. So basically, I'm very sorry for all these theories we have been doing since, but at the same time, we need to do it because you need it. You need to understand some little things about the markets you're trading. You understand? Now, the core trading terms we have in the Forex and the crypto space. Now, some of you have been hearing people saying, traders saying bulls, but you don't know what it means. The bull we're talking about here is not animal, and the bears here, they are not animal. The bulls are basically referring to traders that are expecting price to go up so that they can buy the market. You understand? Bulls are the people that are of a particular currency. Let's say, for example, now, if I say I'm bullish on Canadian dollar, that means I'm expecting the value of Canadian dollar to increase. So in that case, I'm a bull. You understand? So next thing is bears. Bears are the traders that are expecting the price of a particular asset or currency to go down. They want it to fall so that they can sell it and take profits. So that one thing you need to understand about this market is that whether the market is the currency is doing well or is not doing well, you can actually make profit in any market condition. So if the currency pair is increasing in value, what you just need to do is try and look for a buy position, buy, so that you enjoy that benefit. By the time that value of that currency rises to a certain level, you take your profits off the market. And bears are people that their plan is that for that currency or asset to crash. They want it to fall so that they can take profit when the market falls to a certain level. So basically, what you'll be doing as a trader is to try and analyze your chart and predict what the market is going to do. Maybe the market is going to increase in value, or the asset you're dealing with is going to fall in value. So if you can predict well, that is how you make profits as a trader. Now, the next thing we have here is market. Okay, some of you have been hearing me using the word market. This market I'm talking about here is not your local market where you buy stuffs. No. What we are doing in this market I'm talking about here is basically financial market. So market is a place where buyers and sellers trade assets. You understand? That is where they trade assets like currencies. Just explain now: the AUD, the CAD, the USD, the NZD, the euro, the pounds. They trade assets like currencies or crypto. So for those of you that are trading crypto, you can see that most of the things we are doing here as a crypto trader and as a forex trader is basically related. You understand? One thing you need to understand about this market is that your technical analysis, whether you're analyzing the forex market or you're analyzing the crypto market or you're analyzing the stock market or commodity market, the technical analysis, those analyses you used to see people doing on chart, is the same thing. You can apply that to your analysis that you are using on forex, to trade forex. You can use it to trade crypto. you will make profit. Yes, because as far as that market involves candlestick, then you are good to go. So if for any reason any market just come up today now, and the market can be analyzed using candlestick, as a trader you are supposed to be able to trade that market. Understand? So the next thing we are talking about here is broker. So broker is a company that gives you access to the market and execute your trades. So basically, this broker we're talking about is where you're going to be depositing money. You understand? You're going to be depositing money to trade. And basically, when you make profit too, you can withdraw your money from that broker. So broker is giving you their platform. They're giving you that access. They're connecting you to the Forex market or the crypto market so that you can participate in the market as a retail trader. You understand? So that is that. The next thing is base currency. I've already explained this thing earlier. I said base currency is the first currency in a pair. For example, euro is the base currency in this euro USD pair. Next thing is quote currency. Quote currency is the second currency in a pair. It shows the price of the base. So basically, this is euro USD now, and I told you that this first currency is what? Is the base currency, is the base. This second one is the quote. So if for any reason you want to sell euro USD, your decision, the position you are trying to take, whether you are buying or selling, is directly going to be affecting this base, which is the euro. You understand? So for this euro USD pair, if I'm trying to sell euro, that means I'm selling euro and I'm buying USD. You need to buy. Once you buy one, you're already selling the second one. Once you sell one, you're buying the second one. So if, for example, now again, I want to buy euro USD, it simply means I'm buying euro and I'm selling US dollars. That is what it means. So please don't don't stress yourself too much with all these things I'm saying. You basically understand it along the line. An overview of everything on these trading terms, you understand? Because as a trader, you need to understand some simple terms. I cannot be explaining everything during when I'm analyzing chart or I'm doing something. But as a trader, once we finish this class and you practice and try and read one or two things, you're going to be seeing that it's something you'll be able to relate to. Then the next thing we have here is bid price. Now, bid price is the price the market is willing to buy from you. So let's say, for example, now you have fund your account, you fund your account and you want to trade. So the bid price is the price that market want to sell a certain pair to you. So if you want to trade euro USD now and you're seeing the current market price of euro USD to be 1.1122, it simply means that is the bid price. The market is willing to, the bid price is the price the market is willing to buy from you. Is the price the market is willing to buy from you. So for example, if euro USD, for example, is trading at a certain market price, it simply means that bid price is the amount or the price the market is simply willing to buy from you. So it's very simple. The next thing is ask price. Ask price is the price that the market is willing to sell to you. You understand? You enter your chart now. You want to take a trade, and you are seeing the price of that particular commodity or asset still trading at a particular number. It means that is the price the market is willing to sell that currency pair or crypto pair to you at that moment. So that's that. The next thing is spread. Now, just think of spread as trading costs. It's a very small money. That's if you're trading major pairs or minor pair. If you're trading exotic pairs, you'll be paying large spread. Like your trading cost will be very high. And that's because of the huge difference between the ask price and the bid price of the exotic pairs. I already explained major currency to you. Now, let me give you a very simple explanation. Major pairs are basically any pair that involves US dollars. So if you're trading any pair against US dollars, or you're trading US dollars against any pair, any major pair, those 8 currencies I mentioned earlier, if you're trading them against US dollars, they are all called, you call them the major pair. So if I'm trading USD CAD, I'm trading a major pair. If I'm trading AUD USD, I'm trading a major pair. If I'm trading Euro USD, I'm trading a major pair. If I'm trading USD CHF, I'm trading a what? A major pair. So any pair that involves US dollars as either the base or the quote is basically what? A major pair. Now, minor pair, those are pairs that, let me say, you're pairing a major currency with another trading. For example, you're trading Euro GBP. So you're trying to pair Euro as a currency with GBP. That's Great Britain pounds. So that Euro GBP now is a minor pair because USD is not involved. So if you are trading any major currency, you're trading them against each other. As far as that pair you're trading doesn't involve US dollars as either the base or the quote, that currency, that pair is a minor pair. So the last one now is what we call exotic pair. Now, exotic pair is any pair that, for example, now you want to trade Nigerian currency. You can see I laughed, yeah, because if let's say you're trading Nigerian currency, even if you like trade it against US dollars, if you go and check the chart, you see the way the chart is not going to be readable safe. It won't be readable. If you go to minutes, you might not even see charts, you'll be seeing blank charts. That's because those pairs are what? They are what is it called? They are minor, they are exotic pair. So if you're trading, for example, now you're trading South African is it rand they're spending there against Nigerian naira, you're just wasting your time. First, the spread is going to wound you. Yes, the trading cost to be very high because the bid price is too different. The difference in the price is too high from the ask price. So the bid price and the ask price, the market difference, the price difference is too large. So there's no reason for you to trade any exotic pair. So all those underdeveloped country like Nigeria, like what is it called? Cameroon, like Ghana, Kenya, all those currencies, don't trade them. Don't trade them. See, don't go there because let me try and give you very practical view and show you what I'm talking about. So now I'm on trading view now. I'm on trading view. I want to enter trading view and explain what I'm talking about. Okay. I want to enter trading view now. Now, look at this chart. Yeah, I hope my trading view is displaying now. I hope it's displaying. Okay. So look at this chart now. So you see this Euro GBP you're seeing now. This Euro GBP is called a minor pair. Euro is a major currency. Also, British pounds is also a major currency. Now, the combination of two of them is called a pair. So Euro GBP now is a pair. Let me use this cursor so that people can see what I'm doing. Now, this particular Euro now, you can see Euro and you can see because you're trading a major currency against another major currency, but US dollars is not involved. As far as US dollar is not involved, it is a minor pair. So now let's say, for example, I want to trade Euro USD. Let's say I'm trading Euro USD. You can see now Euro USD. Now you can see that USD is involved in that pair, right? It simply means that this Euro USD is a major pair. Now let's do another practical example. Let me show you what exotic pair is all about. You will see that the chart is not going to be readable. Let's say we want to trade Nigerian. Yes, this thing is NGN, right? NGN USD or USD. Let me say USD NGN. Now let's enter the chart and see exactly what I'm talking about. The chart, you can see that the chart is not displaying. You can see on a normal day, if I enter another pair now, I will see chart, but you can see the way. I'm not even seeing anything on my trading view That's to tell you how useless the currency has become. You understand? Now, some of you are joining from other countries, like I think some people are joining us from US, and then some people are joining us from other African countries like Ghana. So if you have the time, go and check your currency for those underdeveloped countries. You see that you will not be able to read the chart. Now, the only way you can read the chart of US dollar against Nigerian naira is, let's say, for example, you go to weekly chart. Okay, you can see the chart is displaying a little bit. Hey, we can see something. Yeah. So, and as a trader, you need all those lower time frame to do your analysis. You need those lower time frame to analyze your chart. But because of the fact that there is no liquidity in this exotic pair, I told you exotic pair are pair. Even though you like trade pair USD or Euro with any underdeveloped country currency, this pair, those pairs are useless. Don't trade them. But if you want to prove stubborn, you can go and trade them. First, the spread is going to injure you. Yeah, because the trading cost will be very, very high. It's very high, very, very high, and that's because of the difference between the bid price and the ask price. So the only way you can read all these exotic pairs chart is when you go to higher time frame, like monthly. You see, you can see it in the monthly time frame too. You can see how useless the pair is. Look at the way it's even moving itself. You see. You can also see it in our weekly time frame too. You can read it a little bit. You see, look at the way it's trending. It's not even trending. It's not even having a clear direction. So even as a trader, if you want to analyze this chart now, it's going to be a total disaster because you won't be able to analyze shit. And that's because this pair is not moving normal. There's no liquidity in the market. If you go to lower time frame, like 4 hours, you see, the chart is not clear. You see, it's not clear. No liquidity, no is trading it. You understand? Nobody is trading it. Look at 1 hour now. Look at no chart. I'm very sure if we go to 1 minute, we'll not even see anything. Okay, you see? See the way everything is empty. So that is what I'm talking about. So let's go back to another minor pair. We have CAD JPY. Look at it. CAD JPY. We are pairing Canadian dollar with Japanese yen. You can see Canadian dollar is a major currency, and Japanese yen is also a major currency. Now, pairing those two together, you're going to get what we call a minor pair. The only reason why we are calling it minor pair and not major pair is because USD is not involved in this pair. There is no USD as the base or as the quote. So basically, it is not a major pair. It is a what? It is a minor pair. Now, you can see that this one now, if you like, go to 1 minute, you will still see candlesticks. You see the way candlesticks are there, even at 1 minute, a very low time frame. Look at 1 minute, you are in charts. If you go against US dollars, you must see anything. If you go to Indian rupee against, let's say, euro now, you must see good charts there because people are not trading. Nobody wants to lose money. Yes, nobody is ready to pay high charges, and at the end of the day, you still not enjoy. You will not even make any profit because of the fact that there's no liquidity in those markets. So, as a trader, as a beginner trader, I would advise you to focus only on the major pairs, the major currency pairs, and the minor currency pairs. Don't trade exotic pairs. That is that for that.